Most individuals are losing where to begin when it comes to investment. Fortunately, great investors from both the past and the present can guide us. Kiyosaki told Stansberry Research that the Eurodollar yield curve had inverted, indicating that something terrible was happening. The interest rate on short-term debt is higher than on long-term debt. Then came Lehman Brothers and the COVID-19 epidemic. To be clear, this is not the first time Kiyosaki has issued a warning. In September, he informed Kitco News that October would see the largest crash in human history. The author does not intend to reverse his ultra-bearish stance. He claimed that we are already in a technical depression. If you are new to our YouTube channel, please subscribe and click the notification bell to avoid missing new content. Dinero Association will regularly add videos to keep you updated on the latest in business and finance. Robert Kiyosaki's final warning: the world's greatest stock market crash. Kiyosaki purchased his first ounce of gold in 1972 when gold was priced at $50 an ounce. He is continuing to buy gold, which is currently priced at approximately $1,800 per ounce. He also highlighted that he is not buying gold because he enjoys it. Instead, he does not trust the Fed. He makes an excellent point. By 2020, more than 35% of all US currency will have been printed. On the other hand, gold cannot be created the way fiat money can. Additionally, its value is mainly unaffected by global economic trends. The precious metal's safe haven status attracts investors during times of crisis, making it an excellent hedge. Robert Kiyosaki warned of a possible stock market crash and economic disaster. Kiyosaki's looming financial catastrophe will affect gold, silver, Bitcoin, and real estate. He didn't say when he thought things were going bad. He also stated that he would buy all assets if their values fell. His comments came as US consumer inflation hit a 40-year high. The cost of living surged again in November, increasing the US inflation rate to a nearly 40-year high of 6.8%, putting more strain on people as they deal with rising petrol, food, automobile, and rent expenses, among other things. To be fair, the author has long predicted a financial market crash, but it hasn't happened. Following the COVID outbreak, several analysts and market professionals expressed concern about asset values and the Federal Reserve. While Kiyosaki's prediction of a recession is unlikely, analysts worry that valuations are too high as the economy recovers. Economists fear that valuations are too high as the Fed tightens monetary policy and the government cuts stimulus spending. Robert Kiyosaki recently predicted the most significant financial market calamity in history, praised the Bitcoin sell-off as an opportunity to buy more, and compared Warren Buffett's investing style to his own. Aside from overborrowing and devaluing the dollar, he promotes loans to investors and encourages young people to create businesses rather than work for others. Personal finance guru Kiyosaki has criticized federal stimulus initiatives, warning of a market bubble and advising investors to hoard Bitcoin, gold, and silver. Bitcoin's rapid growth reflects people's increasing skepticism in fiat currency. Bitcoin, unlike traditional currency, cannot be created. Mathematical constraints limit the total amount of Bitcoins to 21 million. Bitcoin's price has more than doubled this year. The ProShares Bitcoin Strategy ETF provides exposure to the world's largest cryptocurrency. The crypto industry's companies like Coinbase and MicroStrategy offer another way to profit from the crypto explosion. Kiyosaki continued his market forecasting, with a 10-point investing tip. The first is as follows. According to Kiyosaki, the snowflake analogy was inspired by Jim Rickards' book Currency Wars. The next crash will be similar to an avalanche waiting for the final snowflake to fall. Since 2008, the federal government has done nothing but add to the mountain's debt, patiently waiting for the next snowflake to fall. It will be the most catastrophic crash in human history. The second is the US dollar will depreciate to the same level as the Zimbabwean currency, with gold, silver, and Bitcoin gaining far greater value. Additionally, he asserted that the government teaches you to go to school, find work, and labor for this nonsense. He merely makes a comparison between this foolishness and gold, silver, and Bitcoin. 3. He also discussed Bitcoin's price decline from around $60,000 in April to roughly $34,000 now. He continued by stating that he entered for $9,000 and is still black. He is relieved that the price has decreased, allowing him to purchase more. 4th, he then discussed the ramifications of central bank-issued digital currencies. What will happen to the financial system if the yuan, dollar, or Fed coin become crypto? That is the most critical question he has left for today's youth. 5. According to Kiyosaki, he is not a stockholder. To be honest, he is not a fan of stocks. As an entrepreneur, he is not required to hold reserves. He generates his own properties, such as the global brand Rich Dad. 6th, do not be an employee, he advised the youth. If you follow in the footsteps of Bill Gates, Elon Musk, or other famous entrepreneurs, you will amass enormous riches. However, if you're going to sit and trade stocks, you might do so in Bitcoin as well. 7th, establish a business that is resilient to crashes, booms, and busts. Individuals under the age of 18 should not attend school and then work. They should develop entrepreneurial and investment skills and establish businesses that employ others. 8. Eliminate your debt. Lead a debt-free existence. He said that anytime the opportunity to acquire real estate presents itself, he borrows as much money as possible. He owes roughly $1.2 billion and generates millions of dollars in cash flow each month. Yet he pays no taxes since the tax system encourages debtors. Everything you're taught in business school is bunk. 9th, like Trump, grown-up men are in debt and do not pay taxes. That is essentially what he teaches, in contrast to everything else. The 10th is, he is not indicating that investing in stocks is a good or terrible decision. Instead, he points out alternative options. Simply open your eyes and witness the growing wealth of the wealthy. Please share and like this content and let us know what you think by typing your comments below. Keep your notifications open and I'll see you on our next video.